Hello, Eric Dennis with CIR Realty. Hopefully you're doing well. One of the big questions right now is how's the market, and are people anticipating that the market will crash, or is it more of a correction? So I'm going to give you some numbers to consider, and then from there you can decide what type of market we're actually in now and the direction of moving forward. So how we gauge a market, whether it's a balanced market or a seller's market, is by something called the absorption rate or months of inventory. So in Calgary, 3 to 3.5 months of inventory is a balanced market, as I mentioned a few times in other videos. Right now, the detached sector is at 3.16, attached homes is at 3.13. So again, balanced market. The big difference here is apartments. They are at 4.56, so more towards a buyer's market. So if you're looking to sell your property in a balanced market, you need to set the price and expectation so yours separates from all the other properties, because now there's a lot more listings out there, a lot more competition. The buyer's going to have a lot more choices to make. So what are you going to do to make your place sell before all the other ones? It's not always necessarily the price, but it's a huge consideration. And from the buyer's point of view, you're going to have so many more choices before you have to make that decision or want to. And going into negotiations, you're going to have a little more leverage, because instead of the property that you like being unique, there might be 2 or 3 others just like it. So one of the ways that I'm looking at to assess whether it's a market that I anticipate crashing or correcting is something called the benchmark price, which is basically, it's an average over the last 10 years. It's a lot more consistent than just grabbing the average price and making an assessment. So if we jump back to September 23, average benchmark price in Calgary was 565, and in 24 was 596.9, and right now is 572.8. So if you compare where the market has been over the last 3 years, it's actually dropped from 2024, but higher than 23. So really assess where things are going and why they move the way they have. Like, for example, in 2024, we had a huge amount, actually record amount of migration to Alberta, specifically Calgary. And we already had a low inventory, so that bumped up the prices. So now let's dive into that a little deeper. We'll go into detached properties. In 2023, average was 650. And in 2024, again, it jumped up to 710, 2.7% higher. And right now, it dropped down to 690. Now, the drastic changes were actually in the apartments. So in 2023, average was 303, and in 2024, it jumped up to 345, which was huge. And then in 2025, dropped down to 322.9. And in 2023, it jumped by 6.57%. So you can really see where the apartment market was causing havoc on the average pricing. I feel because prices went so high in the single family homes and attached properties, that spurred a lot more activity on the apartment sector. If you look at the percentages, it dropped from 2025 by 6.41%. Quite the jump. So again, if you look at average trends for benchmark price from 2017 to 2019, it actually dropped by 3.1%. So now I'm going to ramble off a couple numbers, all the sales in September. And again, now we're away from the benchmark price, but just the average price, because back in 2006, the benchmark price wasn't really saved or recorded. So in 2006, average price in Calgary was actually 410. In 2007, jumped way up to 470. And then in 2008, 444. 2009, it was 459. And then pretty much leveled off in 2010, leveled off at 460. and now it's at 620. So again, you could really see how the market jumped up depending on situations like the inventory, COVID, things like that. So after spewing off all the numbers and the data, in my opinion, this is more of a market correction, again, because of the COVID, lack of inventory, and then the migration to Calgary is why things jumped up. And the market has been actually slowly shifting since last August. So in my mind, it's a market correction opposed to a crash. A crash was like back in 2008, 2009, which if you're old enough, you remember what happened. It was stock trading and a lot of mortgage fraud going on down in the States. Yes, we have a lot of activity going on in the States with our friend down south. We'll leave it at that. But as it is right now, the market is going through a correction, not a crash, in my opinion. If you have any questions, please feel free to reach out. We'll talk to you soon. Bye-bye.